Now, what is the first step? The first step, take out my answer sheet. That will always be provided to you. Now, this is the answer sheet that has been provided. This is the answer sheet that has been provided for us. The sales, cost of sales, gross profit, operating income, rent income, and then the other expenses are also listed. Let me make this indication that it is not always where you will get an answer sheet with so many details already filled in. In others, they will just give you a blank answer sheet. But fortunately, in this one, some of the information has already been slotted in for you. Right. Then, the next step, I go to my pre-adjustment trial balance, the nominal account section of my pre-adjustment trial balance. There is the nominal section of my pre-adjustment trial balance. And here is my answer sheet. Trying to make sure that all of them are reflected here. Fine. Now, what I'm going to do, I'm going to transfer the amounts from the pre-adjustment trial balance to the face of my income statement. Sales is given as 5,970,000. There I go, 5,970,000. Cost of sales, 3,200,000. Open brackets, 3,200,000. Salaries and wages. I go to my salaries and wages. There it is, salaries and wages. Open bracket, 821,000. Next, we have director's fees. Director's fees has already been included for me. Audit fees. Audit fees, there it is. I open my audit fees. The amount of audit fees is 88,000. Slot it in. Employer's contribution to pension and medical. Open brackets, 81,000. Bank charges already done for me. I do not need to worry about that. Sundry expenses already done for me. I don't need to worry about that. Then I go to the next part. Bad debts, 12,100. I go to my bad debts, open brackets, 12,100. There we are. Rent income. Rent income is there. I go and open bracket. The amount of rent income is 234,950. 234,950. Interest on fixed deposit. Interest on fixed deposit. It goes to the next page of my answer booklet. There, they've already entered it for me. Therefore, I don't need to enter that. Ne? They've already entered it for me. I don't need to enter that. And repairs and maintenance, 125,600. They have already entered the repairs and maintenance for me, 125,600. Consumable stores, 39,500. I go consumable stores, 35,000. What's the amount again? Consumable stores, 39,500. 39,500. And lastly, they have shown dividends on ordinary share. Dividends on ordinary shares. Remember, this is part of the pre-adjustment trial balance. But, I know that this amount must go to the notes of the balance sheet. It does not belong in the income statement. Therefore, do not make the mistake of including dividends in the income statement. It belongs to the retained income note. It will be shown in the retained income note. So please, otherwise you will have included a foreign item and you'll be penalized for that. Right, now remember the instruction said you must prepare the income statement. Now we are also given adjustments and additional information, right? The first adjustment talks about authorized share capital. The authorized share capital comprises 3 million shares, ordinary shares. We are also required to prepare the notes. Therefore, so that I save myself time, I will do both the income statement and the notes at the same time. This one will help me to prepare the note on ordinary share capital and some of the information. Adjustment number 1 will help me to prepare the note on the ordinary share capital. Now, there we go. Let's concentrate on this note. Now, you'll pardon me because there are so many pages here. Therefore, I'll have to juggle them around. We are going to prepare the note for the ordinary share capital. It says the authorized share capital comprises 3 million ordinary shares. Now, under authorized, I simply write 3 million ordinary shares. No amount is recorded there. Right? Then they say, first bullet, there were 2 million ordinary shares for 5,225,000 in issue at the beginning of the financial year. Now, you say, how many shares were in issue? 2 million ordinary shares at what? They did not give us the price. At the beginning of the year. But they've given us the value of those shares. Therefore, those shares was 5,225,000. 5,225,000. Now, in order to calculate the value of those shares, we know that the number at which price were the shares issued, right? We'll say 5,225,000 divided by 2 million shares. Therefore, it means now that these shares were issued at R2.61 per share. Those were the shares that were in issue at the beginning of the year. The second bullet, a bullet is this dot. Ne? When I say bullet, I'm referring to that dot. The second bullet says a further 250 new ordinary shares were issued. Now, they say how many? 250,000 shares. Issued at R2.50. Right? At R2.50. Now, the value, you simply say 250,000 multiplied by R2.50. Multiply by R2.50. It gives us 625,000. There you are, 625,000. Now, the third bullet. The third bullet says the directors decided to buy back 10,000 shares from any at R3.10 per share. An electronic transfer was made on 28 February 2014, which means the company paid any. However, he is still entitled to dividends during the current financial year. That information is important, but it will become relevant later on. What is important now is that 10,000 shares were bought back. But you cannot use that 3 rand 10 cent. You must calculate the average share price, because we said the ordinary share capital can only decrease with the average share price. Now, how are you going to calculate the average share price? You're going to take these two amounts, the total of the ordinary share capital. Therefore, you are going to have 625,000 plus 5,225,000. It gives you 5,000,000. It gives you 5,850,000. And then you divide by the number of shares in issue on that date. You divide by the number of shares in issue on that date. How many shares are in issue? Is 200,000, 2 million plus 250,000, which means it's 2,250,000. Then let's divide by 2,250,000. It gives us 2 rand 60, which means the ordinary share capital is going to decrease with the average share price of 2 rand 60. Then we say 2 rand 60 multiplied by 10,000 shares, it gives us 26,000. Now, remember we paid 3 rand 10 cent, right? The average share price, the ordinary share capital decreases with the average share price of 2 rand 60. Then the difference between 310 and 2 rand 60, which is the 50 cent, would go to the retained income note. Will go to the retained income note. Now let's go to the retained income note. Then we'll go to the retained income note, and then you say 10,000 shares bought back at 50 cent. Then you say 10,000 multiplied by 50 cent. Therefore, 5,000. What this simply means is that the retained income is going to decrease by 5,000 and ordinary share capital is going to decrease by 26,000. Right. Then you can complete that note of ordinary share capital. You have 5,225,000 plus 625,000, which is the shares that were issued during the year, minus 26,000, which is the shares that were bought back. Then your ordinary share capital will be 5,824,000. I hope that is well with you. In order to save time, I'm working, I'm doing all these things at the same time, so that I don't have to come back later and reread the information. Fine. For now, we are done with this section. For now, let's put it aside and go back to our income statement. Now, which means we are done with the first additional information or adjustments.